Holy shit, dude. So you're telling me that you've only been trading breakouts on the 5 minute time frame and you're only trading the hour window after New York session opens, right?
Yeah, so I've been trading the same way for the last 8 months, dude. Like literally as soon as New York opens, I'm only trading an hour, dude, and I just completely ditched the whole ICT bullshit.
Holy shit, dude. I need to try this.
I got a payout today for $21,000. We've also got a payout of $7,923. I got a 9.5 grand here, 16 grand here. Earlier last year, I then got 26K, got 18K, 13K, 7,300, 7,500. And then 18K. So you know that moment when you try something new, but you have absolutely no idea why it's working. That was me when I tried out the strategy for the first time. I was making money with it and it seemed too easy. I had to prove it wrong. I thought this had to be a fluke. So I tried it out expecting to expose the strategy as one of those pie in the sky strategies that you see all over YouTube. But what I found wasn't just surprising. It made me 200K in 9 months. During 2024. But that's not the craziest part. You've probably seen this setup over and over again and you haven't even realized it. Now, the range breakout strategy is based around one very central trading concept, and that is support and resistance. Simply what we're looking for is support and resistance on two different time frames. We trade the 4 hour and we trade the 5 minute for entry, okay? And all we're looking for is price to create a range, and we're waiting for price to break out of that range, close, retest the range, and then continue onwards. We're then going to also be looking at the higher time frames, all right, where essentially we want to make sure that we are trading within those guidelines. Okay, so these dark lines are the 4 hour time frames. We want to make sure that we are not trading directly into a brick wall here on these time frames. So let me go through the steps and show you in detail how to trade this very, very simple strategy. There are 4 steps to go over, but before we go over them, I want to talk about which pairs to trade this on, okay? So essentially the one that I like to focus on is the NASDAQ, okay? That's my favorite because it falls within the New York time period. We can trade New York Open, which is very convenient for me. I also like the volatility that happens at New York Open. So we trade that at New York Open, which is 9:30 a.m. EST, okay? That is New York time. Then we have got the German 40. German 40 we trade obviously at Frankfurt Open. That is 7 a.m. GMT time. And then if you want to trade London session, we trade GBP JPY. The open for that is 8 a.m. GMT. Okay. So those are the 3 different pairs and periods that you can trade this with. Now, let's get on to the steps to actually trading this. Okay. And later on, I'm going to be showing you how to use confluences to get into highly probable trades with this strategy. You use step number 1 to identify if a trade is valid or not, and you use step number 2 of confluences to decide the quality of that setup, okay? How you can identify an A+ setup and get upwards of 70, even 80% win rate, okay? So the first step is to identify the 4 hour key zones, okay? Now, identifying 4 hour key zones, super simple. All we're looking for are multiple places where the market has reacted from. So let's have a look at an example. So as we can see on the 4 hour time frame, we can see that there was a big rejection here, okay? And then as we go down further, we can see that price pushed down and pushed up. So if we are going from right to left, we can quite clearly identify that there's a zone here and we've got a zone here, okay? Super simple. That's how you identify the 4 hour zone. We're simply looking for places where the market has created a V shape, pushed aggressively in one direction, and then pushed very aggressively back in another direction, okay? Once we've identified these V shapes, we can then look to draw zones at them. So in this case, our zone is clearly right over here. Okay, I moved that by mistake. So essentially, we are able to mark this up and mark this up as our 4 hour zones. And what this allows us to do is to determine our directions. Now, as you can see, price is currently over here. So we can go as far up as we want, okay? So this is actually not really in play down here. We're not looking at this because we're currently above this, quite far above it. So we're looking to trade away from this particular zone. We do not want to be taking trades essentially into this zone here, okay? Because this blue line acts as a brick wall for price. So then we want to identify the 5-minute range. Now the 5-minute range is actually where we're going to be taking trades from. So if we look, we can see that price has been reacting along this line here, okay? We've had a reaction here, and a reaction here, okay? These reactions, clearly an area where prices reject. So we're gonna mark this on as our 5-minute range high, and the 5-minute range low will be down here. The reason the 5-minute range low is not here is because if we took a breakout at this point, there's not a lot of room until we get to this next point, okay? That's not going to work out because we can't even get to break even before getting to the next zone, okay? So we want to take the outer zone over here, right? So that is where we are drawing out our 5-minute areas. Then we're looking at step number 3, where we wait for a break and closure, okay, to then potentially get involved in a trade. We want to observe the 50 SMA. And what we want to observe is if we're looking for a buy, we want to make sure that price is above the 50 SMA, okay, number 1. And if we're trying to look for a sell, price needs to be below the 50 SMA, all right? And in this example, we can see that the 50 SMA is trending upwards, which is good. It's pointing up as well. Also really good. We are obviously also above the 50 SMA, okay? We're above the 50 SMA. Now, what's happened here? We can see very clearly that price here has broken out of our range here, okay? And it's closed. It's not just broken, but it's closed above. You see how it's closed above that purple zone? So we're then going to look to enter as price comes back down into this zone and starts to reject. As you can see, it pushed down and rejected. We then would have gotten in over here, okay? We then got in on the trade, okay? And then we're going to observe the 5 confluences, okay, before entering, right? So that is how we would enter, but we want to observe the 5 confluences first. Now, what are the 5 confluences? The 5 confluences are these. The 5 confluences consist of the 50 SMA. Is it trending? 4-hour zones. Are we within a 4-hour zone, or are we close to a 4-hour zone? Are we overextended? So that means, have we already pushed up a whole bunch before coming back to retest? Because if we come back and it builds momentum, it might just smash straight through our stop loss, okay? That's called catching a falling knife. Is the S&P 500 correlated? So if we're trying to take a sell, okay, if we're trying to take a sell and the S&P 500 is pushing downwards as well, then we are correlated. If we're trying to take a buy and the market is busy doing this, then we're not very well correlated. Also, are we currently close, okay, to a 4-hour key zone? So if we're trying to buy and the S&P 500 is busy reacting to a 4-hour key zone like it is right here, then yeah, probably not a great idea to get involved in trades, okay? Similarly, with a very powerful 5-minute key zone, if we are reacting to a 5-minute key zone like we are here, and we're trying to take buys on the NASDAQ, well, again, we're not confluenced with that. Then we're also looking at imbalances. Is there an imbalance below our entry? In this case, we're fine. There's no imbalance here. Price is balanced. Okay, and an imbalance is another way for saying FVG. Those of you who studied ICT will know FVG, fair value gap. It's the same thing. In this case, we can see there is 1, 2, 3 FVGs, okay? And what you'll see happen is price likes to come back to this, okay, gravitates towards it, fills it, and then it will push in the other direction. In this case, I believe it comes back down, pushes aggressively, and goes all the way down, okay? So we want to avoid getting involved in trades that have a significant gap underneath our stop loss in a buy or above our stop loss in a sell position. So those are the 5 confluences to consider. And what I like to see in general is at least 4 out of 5 of these confluence. So we want to make sure that 50 SMA is trending, okay? We want to make sure the 50 SMA is trending. We want to make sure the 4-hour zones are all in check. We want to make sure it's not overextended. We want to make sure the S&P 500 is correlated. And then if there's a slight imbalance below, then we're kind of still good because we've got all of these other 4. But if we've got all 5, then that's really, really great. You can feel really confident getting into a trade with them. So that's how to identify a very high probability trade with this particular system. So once you've looked at those, you can then look to potentially get involved in a trade like we would over here. Okay, so as we can see, once price has broken and closed above, we can then look to enter on the retest and rejection. So once it rejects, we can get in. How do we manage this particular trade? Okay, so let's have a look at trade management. That is really simple. All we're looking at trade management is to enter on the retest and hesitation with a 1-to-2 risk reward ratio. In terms of stop losses, when we are trading an index like the Nasdaq, we use 25 pips as the stop loss. Okay, that's the maximum stop loss. You can also use 20 pips if you like, if the volatility is low. We then do a 1-to-2 risk reward ratio, so your TP would then be 50 pips in that example. Okay, we then go break even at 1-to-1. So when price is at 1 times your risk, we then put our stop loss at entry, protecting our position. Okay, so in this example over here, you can see that once price gets to 1-to-1, which is roughly here, we would then move our stop loss to the entry point, protecting our position, meaning that we cannot get stopped out. Okay, and you'll see here in this example, we end up having our take profit hit at our 1-to-2 risk reward ratio. Okay, and that's the simple system that I've traded over and over and over again, hundreds of times, to produce the results that I showed you in the beginning. Literally made over $200,000 in 2024 just trading this over here. Now, if you want to learn to trade this exact system and master it and be spoon-fed to the point of me taking you by the hand, getting you funded, and getting you consistently withdrawing from prop firm, then apply in the description down below to be part of my Predator program, where we will teach you how to have a real advantage over the prop. Now, prop firms usually have a significant advantage over you. Teach you how to play the game with the odds stacked in your favor, and I take you by the hand and show you exactly how to get there. In fact, we guarantee that you'll get funded within 2 months. And if you don't, we will continue to teach you until you do. As long as you don't have an attitude problem and you're committed to us, we will be committed to you. And in fact, every single person that's joined has been funded within 2 months. So apply down below, at the link down below. If you want to join my free community where I go live every single day and share my trading game plan, then click the link down below to join that Discord. There's 19,000 other traders in there, and there are hundreds of people that we go live with every single day. So I'll see you in there. Thank you very much for watching. Cheers, everyone.